take your eyes off your cash flow because it's the lifeblood of business, said Richard Branstein. Managing cash flow is often one of the biggest challenges business owners face. It's also the prime reasons for business failures. A large percentage of businesses close shop due to cash flow constraints. Hi, my name is Molen Mkuz of Brendmo Chartered Accountants. Today, I want to talk about top 10 tips to maintain positive cash flow for your business. If you like the content you are watching on this channel, why don't you just subscribe and share this content? You are also welcome to comment on the comment section below any subject that you want us to talk about next time. Okay, first thing first, let's define cash flow. Cash flow can be defined as total amount of money that comes in and then goes out of your business. A positive cash flow means the business earns more than it spends and is actually a key indicator of financial health of your business. Wait a minute, in the upcoming videos, we are going to talk more about this financial health of your company. Why do you actually need a positive cash flow? It can be a question. Cash flow ensures that there is always cash on hand to pay for your core business expenses like your payroll, your rentals, and even ensures that you do your loan repayments on time. Positive cash flow enables business growth by ensuring cash is actually available for timely equipment purchases and even upgrades for your business, and even more important, investment in opportunities that can come up. Think of a time where some opportunities passed you by because you lacked cash flow. It's not good. I think you actually agree with me that proper cash flow management is key to your short-term and even your long-term financial success of your company. This means that cash flow strategies should be a priority, a top priority in your business planning. A good cash flow planning will actually allow you to predict when money is coming or when are you expecting to get money and when it must actually be paid out. Before I dip into this topic, the 10 top tips of cash flow management, I want you to watch the video that we actually posted about budgets. Budgets help you to plan ahead and make good business decisions. I'm going to share with you the top 10 tips that you can implement to maintain your cash flow. Tip number 1, increase your sales. I think that's basic. You actually need to come up with strategies. You need to think of how can I increase my sales for my company. It's actually preferable than actually taking loans. Tip number 2, clients' payments, right? You need to watch out for late payments. This is one of the common reasons why business experience cash flow problems. Manage this proactively. You need to invoice the clients on time, sending statements on time, and verify if the invoice was actually received and contact those late payers well in advance, reminding them to pay on time. Follow up on the payment right away. You can also even offer discounts to those people who pay early and even change your policy to implement a cash on delivery policy for those chronic late payers. Consider getting deposit upfront when taking orders. And if you actually offer credit to clients, make sure you perform your credit check first before entering into agreement with them. When the business is growing, you certainly need someone to manage this function because it actually gets tough when the business grows as well. Tip number 3 relates to the adjustments of inventory. Inventory that doesn't sell or stock that doesn't sell well will also negatively impact your cash flow. Move outdated inventory and offload them off your shelves. Offer them for discounts. Don't replace this stock if they don't move fast. This is very important. You can actually stock up cash in your shelves rather dispose of the stock that doesn't sell very well. Tip number 4, manage and trim expenses. Cash flow reduces as and when expenses are paid. So managing your expenses better actually eliminate unnecessary costs. Will this actually immediately boost your cash flow? Also consider other ways to conserve cash flow, such as leasing instead of buying your equipment or your building, a topic for another day. Sometimes business owners or business people are obsessed with owning things. I own it syndrome. You need to assess before buying something. Do you need to own it, or you can lease it? Tip number 5, prioritize payments. Know exactly which payments must be made when. Then the order of the priority of those payments. Spreading the payment dates. The most important one, they should be paid first. And also look at the more flexible payments and pay them later. Where necessary, you actually need to negotiate payment terms with your suppliers. Don't do that to your accountants and your compliance people, because your company will not be compliant and you'll be in big trouble. So accounting fees are a no-go area. They are very important. Tip number 6, increase efficiencies. Take advantage of technological advances and artificial intelligence, such as apps, softwares, and even other equipments to streamline your business processes and increase efficiency within your business. Always be on a lookout to identify operations or even tasks that can be cost effectively outsourced to freelancers or third-party service providers. Do you know that outsourcing can be cheaper than in-house sometimes? You need to look at your business and look at the roles and functions that you should take out or outsource to reduce the cost. And this will automatically reduce or manage your cash flow. Tip number 7, use a business credit card. A well-managed business credit card could be used to pay your day-to-day expenses during the month so as to free up your cash. This will require keeping a tight record of those expenses and being disciplined to repaying the full balance within the interest-free period. That's the cash. It will also allow the business to benefit from any rewards programs that can reduce expenses, such as, for example, certain percentage of cashbacks on some purchases. So you can take advantage of that. Tip number 8, keep a line of credit. A business line of credit can be a saving grace for small businesses and companies impacted by seasonality. It provides quick access to funds when needed. For example, to bridge the gaps between invoicing and payments, to buy equipment, or to cover for seasonal or unexpected expenses, or to even take advantages of growth opportunities that we spoke about. The business will have to negotiate such a facility before cash flow problems arises. Tip number 9, make your money work for you. At times, good times, you can have a surplus of cash. So for seasonal businesses, and at times, it is very crucial to make sure that the money works for the business. This can be achieved through building up reserve fund for emergencies, which I know financial planners suggest that you should ideally have sufficient money to cover 6 months of your business expenses. Making smart investment as well, paying off your debts faster to ensure to keep the interest. You know, the interest rates are going up. Consider any surplus cash short-term investments in the money market or call account so you can earn some interest rather than leaving your money resting idle in a bank account that doesn't earn interest. Tip number 10 and my last tip, you need accounting expertise. Successfully monitoring and projecting cash flow often requires professional assistance. Alongside the balance sheet and income statement, the crucial cash flow statement is one of the 3 main types of financial statements. Generally, it covers 3 main areas, which is your everyday operations, your investment activities, your financing activities. It reveals the trends and it allows potential cash flow problems to be identified and managed on time. So for this interpretation, check out our next video where I will take you through how do you interpret your cash flow statement as part of your management account pack that you receive from your accountant for good decision making. For more information as well, you check out our website. We have a lot of content in the form of blogs so that you can see how you can manage that as well. Remember, you need to do your cash flow forecast and budgets and projections. Future cash flow requires assessment of your previous numbers as the basis of your cash flow for the following year, and then you need to adjust those numbers with anticipated changes, such as your new pricing, your hiring of new staff, and your new funding requirements. It's important to do your cash flow budgets so that you know how to manage your cash flow. Top tip, speak to your accountant and request to access this cash flow statement report and have a professional assistance to understand how your cash flow is working in your business so that you can make good business decisions. Thank you for watching. See you in the next video. I urge you to subscribe to this channel or even share this content to your loved ones, your fellow business people, as well as your family members. Thank you. See you.